Good afternoon. In this video, we're going to go over this week's options watch list. Before I get into the watch list, I just want to say if you're not in the room, you can find the link in the description of the video and in the bio section of social media. Also, please like the video and subscribe to the channel if you haven't already. And with that said, I'll get right into it. I don't have much on the watch list because I don't really think much is going to happen. I know the volume is probably going to start picking up, but we have FOMC next week, so I wouldn't be a bit surprised if we end up seeing a tight range market or a slowly grind up, gap and grind until FOMC. That's just my opinion. That FOMC that's coming up is going to be the big one. That's going to be where they're going to talk about tapering, projections, and Powell speaking. So that one's going to be a major one. So usually when it's leading up to a big FOMC meeting, that usually just gaps and grinds. So we'll have to see if that actually happens. That's why you need to be in the room, because the gap ups, the gap downs, and the news that happens throughout the day or throughout the night do change the dynamics of the play. That's why you need to be in the room. And also the Trade Ideas channel, I try to post the play before I take it, so that way people can make their own decision if they're going to take it or not. But sometimes things happen. I can't post everything, but I try to at least do 90%. But anyways, with that said, I'll start with the bearish side. I have Visa up, but I don't have Visa on the thing. But I'll probably end up watching Visa. But I mean, the one thing I was looking at with Visa, I don't have it on the watch list, but I'll probably end up still watching it, though, is because we're going into the fall season, credit card season, Christmas season. So we could see more activity in Visa. So I will watch that for a reversal over like 227. So. But for the bearish side, Disney is one of them I'm looking at now. I'm looking at it from the point of view of the daily. It's tapped the top of the Kellner channel like it did here, here, and here. This 187 area, 186, it likes to reject. It rejected it harsh here and here. So I'm wondering if we'll reject it hard here too, back down to maybe the 172, 170 area. But we'll have to see if it does do that. So I'll watch it underneath 183, 184 to push to 180. Then you get the 178 area, 177. Then you get the 172. So we'll have to see if Disney has any downward momentum this week or not. I mean, it coan also break out too. I mean, it's been sitting in this channel for a few months. So since March. May 17th, so it's been sitting in there for a good few months, so almost the entire summer, actually the entire summer. So we'll have to see if it could also break out, like I said, but I'm watching it for the downside. So BA is another one now. BA, just the weekly looks bearish, the daily looks bearish, and anytime you think that it can't get any more beaten down, it just surprises you. So I would watch it underneath the 210 area for probably a push to the 205, 200. 200 would be a big psychological area. And I can see on the weekly, you get a nice little descending wedge right here, which usually means it's bullish. It could break out as bull. If it does manage to get over this 220 area, it's going to break this wedge pattern and then end up probably making a run to 250 and 270. But I'm looking at it from the point of view, it's just making lower highs on the weekly and the daily, that it's probably going to end up, the floor is going to end up falling out and going to 200 or lower. So maybe even down to 195. You get gaps down here in the 160. I just don't imagine BA getting that low. Under 200 maybe, 195, yeah, but down to 160, 165, I don't know. That's seems kind of a big drop, but anything can happen. So BA, I'll be watching that for a downside, and I'll watch it for a reversal too, because like I said, you get this descending wedge right here happening. So which usually descending wedges are they break out of it, they end up having a strong momentum move. Like right here, it broke out and it ripped. Same with ascending wedges. Ascending wedges, like right here, well, you could say right there, they end up dropping. So now to the bullish side. Now I just want to say, I know SPY has had a big red day on Friday, and we could end up seeing more downside. But anytime it gets below the 20 EMA, which is the white line in the middle Keltner channel, it likes to do a quick squeeze. I would not be surprised if tomorrow we end up having a big green candle on SPY and having a squeeze and seeing SPY above 450 again. I would not be surprised at that at all. Did they fill the gap right here? They could end up like SPY likes to trick people, so it's quite possible that SPY could end up dropping in the morning, filling the gap right here, then just ripping all day. So we'll have to see if it does that. So I'll be playing a lot of SPX and this week, so on expiration days. Now Dltr is another one I'm watching, and I just keep looking at this area right here. It likes to bounce at this 89 area, 90 area, so it does look like it could go lower, but Dltr going into the retail season, I think this should have a strong move, so I'd watch it over 91. You could even say 91 or 91.50 for push to 94. Then you get this 95 area right here. Where is 95? Right here. Then you get the 98 area, which is the gap resistance. It'd probably most likely not break through it because you're down like 8 points from it, and then 8 points is kind of a lot for Dltr because it doesn't have that much of a range. I mean, most of the ranges are usually $2, $2 to $3 per day, $2 a day, $1 a day. Yeah, $1 to $2 a day. Even on these real big green days right here, I mean, this one right here is, what can I cover over that? 97 to 101, 98 to 101. So I mean, that's really that's only a $3 move, $3 plus move. It looks like a lot, but it's really not. So Dltr doesn't usually have massive moves. I mean, some of the largest range days are about $3 plus. So it's safe to say that an average day for Dltr is $2 to $3 max. So likely reject the 98 and pull back and make another pattern before it breaks out and fills the gap. But it could definitely fill the gap. And then you can see the weekly candles end up having pretty nice range on the weekly candles. I mean, this one's from 95 to 112. So I mean, that's a 7-point move. No, 17-point move, sorry. So it could definitely go and fill the gap up to 100, but I think it will stall out at 98, maybe chop for a day before trying to go. So Microsoft is another one. Microsoft is one I've been playing because it just does not like to go under 300 and stay under 300. The last few plays I've played, it gets under 300. It just rocks back, spikes back up. So I did it here and popped back up. So I'm expecting Microsoft probably will do the same thing. End up reversing this week, so I would watch it over the 297 area for push to 300, 302, 304, even 306. So if SPY is having a strong day, Microsoft should have one too. So should, doesn't mean it will. Sometimes Microsoft just has a mind of its own. Target, same thing as Dltr. Yeah, I hadn't even looked at Walmart. Let me took at Walmart really quick. Walmart's been like, I don't know, it's been really laggy. It's just anytime it starts to get momentum, it just ends up selling off, and it came close to breaking all-time high at the 152. So, yeah, I'll probably end up watching Walmart. I usually have Walmart pulled up on the chart, but it's not as strong as Target. Target, this thing just never pulls back, and when it does, it's like a gift. So, right here, I'm looking at the daily. It pulls back here and it pops a little and pulls back. It's doing the same thing here. Drops, pops, and pull back. Kind of a slow grind down and trying to pop. So the weekly, it gets to the 20 EMA, the middle Keltner channel on the weekly, and it likes to bounce. So right here, had a green little doji. So that could be the reversal candle right there we'll be looking for. So I would watch it over 247 for a push to 250, 252, 254, 255, 256. You get this 260 level that seems to be pretty big for target. Then you got all-time high at 267. Now target, it just when he has strong days, it has strong days. I mean, like right here, the range on this is 246 to 253. So that's a $7, $8 range day right there. So it could definitely have a strong move like that if it gets over this 247 area. So target, definitely watch. Now I remember looking at the target's options, and they're pretty expensive. So we'll have to see if what they look like. Now Roku is another one. Roku just been getting hammered now. Roku just is at a point. It's at a do or die point on the daily. I mean, it likes to bounce here at this 325 level. It's done it here and here. It didn't quite get to 225, but it bounced a little bit right there. But I know it's had some news about Amazon competing with it, but we'll have to see what Roku does. But I think it will probably end up having a reversal here pretty soon. And when Roku does get some strength behind it, it has a massive day. So I would be watching Roku over you could say 332, but I would say a good area would be 335 or push to 340, 345, 350. The 350 and 351 area will be strong, hard for it to break. Then you get the 355. 360 will be pretty tough. Then you get this really big area up here in the 375, 380 area. But you got 370 right here and 365. So basically almost every $5 or so. But when Roku has a strong day, I mean, look at it right here. I mean, it went from 26 to 75. I had almost a 50-point run right there. But that's extremely rare that you see Roku have a 50-point run in a day. I mean, average range on a stronger day is, let's see, 49. Yeah, it's more like a 20 to 25-point run. Roku has strong runs, and a daily is about 20, 25. So, yeah, I think that Roku gets any momentum behind it, that it could definitely take off, especially over the 345 area. The last, actually, I got a couple more. Twitter is another one. Actually, I was looking at pins too, but pins just, you know, I still think pins is going to have a strong run, but it just, I don't like the way it's been playing. The action lately has just been, at open, it does pretty good. Is this opening? No, right here. This must be opening candle. It starts out strong, then just slams. And same right here. Right here, it starts to break out and get slammed. Right here, it was opening. Yep. You know, it's just been doing that for the last couple weeks. It can't break out. It starts to. It has a massive fake out at the morning. I really hate that, and it just gets slammed. So it starts to pop up, then it slams. Breaks out, slams. I do not like it. I do not trust pins. So I'm just gonna probably I'll have it up on the chart and watch. And if something does look good throughout the week, I might call it. But I don't like the way it fakes out at the open. I just don't like that at all. But Twitter, you know, I'd be looking at this for a bearish point of view. But you know, I think that it probably could bounce. It's getting pretty. It's got a bullish divergence right here on the hourly is one thing that I really like. But you get an inverted cup and handle on the daily right here. And on the weekly, you get inverted head and shoulders. You get the left, you get the head, and you get a possible right shoulder right here. Possibly forming the RCT trend lines right there at 50, at 60. So I don't think it's going to get too much further. Go down too much further. I mean, you could see 60, then you could see a reversal on that. But that's one of the things I'm looking at is that the hour, you get the bullish divergence on the hourly, the RCT trend line on the weekly right here. The only bad thing is, like I said, the inverted cup and handle, which end up usually playing out, but doesn't mean it will play out. We have seen a lot of patterns in the past that are a clear pattern, and that just doesn't work. So not all patterns work. That's why there are high probability of working, but there is no certainty in trading. So, but just be aware, you got bullish divergence on the hourly. a fairly bullish setup, inverted possible, let's just say possible, inverted head and shoulders on the weekly, but a bearish inverted cup and handle on the daily. So you got multiple things happening here, but I trust the hourly probably the most for a short-term play on Twitter. So I'd watch it over 62 for push to 63, 63.50. 64, 65, 66, basically every 50 cents to $1. I like the whole dollars more, but Twitter doesn't really have much of a range. I mean, it usually traditionally trades about $2, $1 to $2 per day, so the range isn't too there, but options are pretty cheap and they move pretty well for that, so that will be a good play. Now UPS is another one. It did have a strong bounce off that Thursday drop, and I probably should have played that on Friday, but with Christmas season coming up, retail season picking up, people are going to buy stuff online, on Amazon, stuff like that. So shipping season's coming up too, FedEx, UPS, and I would expect that UPS has a strong run. So I'd watch it over Friday's high of 190. We'll just round up to 194 for push to 196 to 198 to 200. 200 would be the big psychological area, this 199, 200 area. Now, if it does break over that, it's got gap fill. I would not be a bit surprised if it ends up filling the gap soon, because like right here when it broke out, it had a strong move. This weekly candle went from 174 to 205, so you're talking a 30-point move in a week on that. So a 30-point move right there would send it to all-time highs and plus. So if it did break out to that, so we'll have to see if it does work out. But I think UPS is going to be a good play through the next couple months. So that's going to do it for the watch list. Now, like I said, the gap up, gap downs, they change the dynamics of the play. That's why you need to be in the room. Focus on, shouldn't say focus, but pay attention to the Trade Ideas channel or the pre-market. And that's going to do it. Hope to see you in the room, and thanks for watching.